It's like being on the cover of Sports Illustrated or the Madden curse, and yeah, the Barron's is right there with them. And it's interesting. Last quarter, NVIDIA had that huge run up into earnings. Stock closed, I think, on the day $485, went north of $515, only to subsequently trade below $400 in the next couple of months. Same setup this time. Traded right up to $485, printed $500. Here we are now. So is this a sign of things? Yes. And let's be clear. NVIDIA is an extraordinarily important company. Collectively, we have said that. The stock is being rewarded in almost an obscene way in terms of valuation, in my opinion. A cyclical company still trading at valuations that I don't think make a lot of sense here.
So I disagree with a bunch of that, actually, except what actually happened to the stock before earnings last time, before earnings this time. We've talked about it a couple times. That's how I went into it, that they would sell into earnings and it would probably trade off, which is exactly what happened. I'd like to buy it again, which I did after the last earnings. I don't agree with the valuation being so crazy. I think that part of what happened today was the whole Magnificent Seven traded down, which includes a lot of AI hype, right? Alphabet, Microsoft, but even, Netflix, Meta, which has some AI as well. So I think it was sort of mixed up in that. I don't think the valuation's crazy, and I still think that we are early in this, I don't know what you want to call it, gigantic tectonic plate sort of change, and that I think NVIDIA will earn their way. I do think it won't even be expensive. It'll be relatively fair.
That's starting to happen. Okay, so if you're looking at the out year, you're looking at next year's estimates, it's trading at about 22 times these expected numbers. So over the course of this year, as these beat and raises have happened, it's kind of worked its way into consensus. So if you're looking on the, backward looking, it still does look very expensive for a $1.1 trillion company that all of a sudden had this sort of growth come out of nowhere. I'll just say this. One of the concerns right now is this customer concentration, right? At a time where we just saw Gina Raimondo talking about a lot of this stuff, this has been dominating, I think, a lot of the discourse in and around, not just here with obviously our CHIPS Act and how we're thinking about supply chains and how we're thinking about AI and who's going to control AI in our competition with China, but also obviously over there. So the customer concentration is important, right? Microsoft and Meta make up nearly 30% of NVIDIA's sales, okay? Throw in Amazon and Alphabet, and you get to 40%. Then if you think about geographic exposure, and it's maybe 2/3 outside of the U.S., right? And then if you think about those customers, you think about Microsoft. Every day I've been reading stories over the last couple months how Microsoft's developing their own graphics chips, right? To train their own models, to put in their own, data center and the like here. So the story for NVIDIA was, it's not going to have the sorts of returns. It's not going to have the beats and raises going forward next year, but it probably is trading at a reasonable multiple. But the only problem is like it's going to be relative to its growth. In my opinion, it's not going to be that attractive, not nearly as attractive for those who jumped into this story, who recognized what it was mid-year this year.
Well, yeah, I think it's safe to expect that you're not going to get the same returns that you got being in the stock last year, but that doesn't mean that it's necessarily overvalued. And I do understand the customer concentration, but if you the names of those companies that you just listed are amongst the top 7 companies in the United States. So if I'm going to be concentrated, and most companies have to be concentrated somewhere, I'd rather be concentrated there than, say, in some SMB type segment of the market. The other thing is, listen, there is some concern around the China story and whether or not you're going to continue to see numbers pull back in that region. With that said, I do think analysts are onto something that I think we just have yet to really wrap our minds around how large this thing really can be. The beats and raises notwithstanding, we have continued to ratchet up expectations, and they have continued to outperform those raised expectations. And so until I see some pullback in terms of the growth prospects, I think you continue to look to buy pullbacks in the name.
I think that you can be bullish the longer-term AI story, but be bearish on the name at the same time. If you are a believer, for instance, that companies are going to start to really scrutinize their balance sheets next year because of economic troubles or whatnot, then how are they going to justify that level of AI spend? And so it's just the level of spend. It's not necessarily that they won't be spending, but maybe they won't be spending as much as forecasted to meet the economic times.
Or maybe you've already seen the double ordering or potentially triple ordering. And I don't know if we have that graphic of the comments from Gina Raimondo, but I think this is important. I mean, she's basically saying if you try to circumvent the rules, be careful. We're going to go after you. I mean, you can't take... I don't think you can discount that. And it's pretty important. I'm not certain that's what took NVIDIA down today, but it clearly didn't help. And again, can they grow into the valuation? Absolutely. It's going to take time. And that beat or that raise from $7 billion of revenue to $11 billion we saw a couple quarters ago, I don't think you're going to see that magnitude of percentage beat. In terms of absolute numbers, obviously, yes, we went from 18 to 20 now, but I think those beats are going to be smaller and smaller. Typically speaking, I mean, a space that everybody wants to be in will become commoditized, and margins typically decrease on the back of that.